Welcome to Cannabiz Accounting's Tax Web series sponsored by CMATES.org. My name is Gordon Gates and I'll be your moderator today. In today's video presentation, we'll be talking about the changes to the health savings accounts, Obamacare, plus a few of the major tax extenders that were once again approved for 2014. Now, each year as CPAs and enrolled agents, we cringe at the thought of what the new tax code changes will bring, and this year is no different with the addition of the Obamacare forms. Fortunately for our clients, our tax professionals spend a minimum of 60 hours learning about the new tax laws and the impact that these have on your tax returns. Staying on top of important changes can also help you save money, as well as avoid any headaches and hassles. Now let's get to some of the key changes that we need to talk about today. First off is if you have a health savings account through work, you'll find that the eligibility rules have changed. Be sure to bring in your HSA tax form when you come in for your tax appointment. You might know that since 2013, you've been able to carry forward up to $500 in unused money from a flexible spending account. Now, remember, an FSA account lets you set aside pre-tax dollars from your paycheck to be used for qualifying health care expenses. But most of the money must be used within the year or else it's forfeited. It's the use it or lose it. Beginning in 2015, though, if you carry forward any money, you will no longer be eligible for a health savings account. Huge change. This new rule is going to confuse many people, and we know that many off-the-shelf tax products don't know how to handle this issue. It's complicated, and we highly recommend you discuss this with your tax professional. Now let's discuss some of the tax break extenders that have been put into effect. This is a bit of news relates to your 2014 tax return, not your 2015 return, but it's worth noting it's very recent tax law change. More than 50 tax breaks facing extinction were just given a retroactive one-year extension by President Obama. So once again, we're able to take advantage of some great Bush tax cuts, at least for 2014. Now, some of the major extenders include, first up, is the ability to deduct state and local sales taxes instead of state and local income taxes. For most of our clients, this has no impact on your tax return. However, this change matters a lot to those that live in states that have no income tax. Other than that, if you're retired and you're collecting checks and you don't have any money coming or being deducted out for state income tax, but you've got a mortgage or you still qualify for a Schedule A exemptions, this is going to help you out as well. Second up is the ability to exclude up to $2 million of forgiven residential mortgage debt. So let me give you an example on this one. Say if you did a short sale or was subject to a foreclosure during 2014, chances are you're going to receive what's called a 1099-C from your lender. Now, normally that would be included as income on your tax return, which is crazy. But fortunately, because of the extender, you can still get it expunged from your tax return by completing a few tax forms. Once again, we're finding that the off-the-shelf tax products are quite confusing when trying to answer the questions. On complex items such as these, we recommend you see a tax professional. Now, the next one up is big in the states of California and New York, where the extension for mortgage insurance premiums. These are premiums that you're paying as a result of putting less than 20% down on your home purchase. Typically, these are, if you have an FHA loan, you put 3 to 5% down, you're paying a mortgage insurance premium. We recommend you check your equity. If your loan to value is 79% or less, then you may want to refinance and eliminate this cost on a go-forward basis. Next deduction is for our teachers. Thank you very much for all that you do for our kids. You're still allowed to take up to a $250 deduction for classroom supplies that you buy out of your own pocket. Next up is my favorite, and that's the education credit. With 2 kids in college, I can still receive up to $4,000 of credit for education costs per child. Now, remember, this is a credit. This is not a deduction like the $250 teacher deduction that gets deducted from your income. This is credit that gets added to your tax refund or subtracted from any taxes that you might owe. Be sure that you bring in your 1098-T from the university or college that your child attended so that we can pick up the correct information off of that and make sure that you get the highest credit coming back to you itself. Last but not least is the energy efficient home improvements tax credit. You can get up to $500 for qualifying improvements. For those installing energy efficient windows, doors, solar systems, water heaters, etc., bring those receipts into your tax professional to get your tax credit computed for the year. And of course, let's not forget about Obamacare and the penalty for not carrying health insurance. The upside for Obamacare was supposedly making health care coverage affordable for millions of Americans, but it also penalizes those who opted out. For 2014, if you didn't have what was called the minimum essential coverage in place by March 31st, you're going to get hit with a penalty of 1% of your income above the tax filing threshold, or $95 per adult and $47.50 per child, up to a family maximum of $285. Now, you're going to pay the greater of, either the greater of the $285 in this example, or the penalty of 1%. In 2015, this jumps. Now it becomes 2% of your income, or up to $975 for a family. And they continue to rise as the years go on, all the way out to about 2020 is what they've got it set up for right now. Now, you're probably going to need to provide some proof of coverage to your tax professional this year to get out of paying the penalty. As of this publication, again, we're still finding that the off-the-shelf products are still having some difficulty with the Obamacare forms. For those of you that have coverage through work, you don't have to worry about bringing anything in. This will be reflected on your W-2. If you'd like to know more about Obamacare and what's happening there, check out some of our other videos that we've got up on our site. Other new tax laws for 2015 are worth learning about. Check out our video series to see what you can take advantage of. We know you have a choice of tax professionals out there, and we appreciate you entrusting Cannabiz Accounting and Tax Services with yours. Thanks for stopping in, and make it a great day.